Tesla breaks semiconductors. Qualcomm and Apple battle royale. New applied materials equipment. Does Nvidia need cash? We're also going to take a closer look at some other topics on today's episode 17 of Semiconductor Investing and More, the number one semiconductor podcast in the world. Today, like always, I'm joined by two amazing co-hosts. First, let me introduce Nick. Good morning, Nick. How's it going?
I'm great, Jose. I can't believe it's already been 4 months. And 4 months into this, I think this is maybe the busiest week for semiconductor news we've had yet. I had no shortage of news items to bring to your attention this week. I had to get picky.
Definitely, Nick. I mean, before we started recording, I was talking to Billy, and let me introduce Billy in a second. But we were saying how we can probably go with another episode in a few days if we wanted to, just with the amount of material available right now. So For the second host, I have Billy joining us as well. Well, third host, second co-host, third host. Billy, good morning, Billy. How's it going on your end?
Whatever works. Things are great. Lot of chaos and tumult in the chip market, but a lot of exciting things to talk about too.
Definitely. So thank you guys again for joining me. If you want to find Billy, if you want to find Nick, links are on the pinned comment for where you can find them. So make sure to check that out and show them some love. So let's start off with topic number one, guys. And this is going to be, I think this is the most popular at the moment as we are recording. Tesla yesterday had their investor day. And I believe it was about a 4-hour live stream. Within there, they talked a little bit about the semiconductor market, and we are seeing some form of impact from that talk yesterday. So if we kind of move into the first slide, it's Tesla breaks semiconductors. And we can see there are few companies out right now as we are recording that are down. Some are down double digits. We can see Wolfspeed down 11% as of around 10 o'clock on Thursday. We have On Semiconductor down over 7%. ST Microelectronics down over 5%. And we have a here, is that a here test system down over 22%. And some might be wondering, Jose, what's happening? Guys, why is this down? Why are these stock prices down? Well, during Tesla's Investors Day, a few key points came out for the future of certain semiconductors in the auto market. First, Campbell, who is the Tesla's vice president of powertrain engineering, said that the company's next-gen drive unit will use 75% less silicon carbide than their current generation. This is kind of causing a lot of these stocks to drop because I want to say with this fuel growth of the auto market, one of the growth portions in the semiconductor has been this silicon carbide. We've talked about a few of these companies in this podcast in the past. I do want to say a few things. First, they did note that this kind of semiconductor is a great semiconductor. It's not that it's not great. The biggest problem here is that it's just too expensive. And obviously, being an automaker company for Tesla, they have to improve those margins. So they say they found ways to kind of reduce that. So a few things here. I do have some other key points, but when I first read this, obviously, first thing is bad news for these silicon carbides, right? 75% down. But then I start to think, all right, does this force these type of companies to innovate a little bit faster? Maybe try to find ways to get their products a lot cheaper than they are right now. This 75% that they're talking here, what portions are being used, right? Is it a special type of part in the car? Are other portions of that semiconductor material still being used elsewhere? And the final thing I want to say is this is for their next gen. Who knows when that's going to take place? Sometimes Tesla makes over promises to some extent. We can see that with like the release of the Cybertruck and other stuff like that. So there's a lot of questions here, but we do see that the market is reacting pretty strongly to these to this topic. So Billy and Nick, I know you guys might follow this industry a little bit better than me, so I'll just pass it over your way. I'll pass it to Billy first to kind of and your thoughts after you saw this and kind of the price reaction in some of these stocks. So send in your way, Billy. I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
Yeah. It's real tough. It's just another one of the pitfalls if you buy a stock that's kind of expensive based on something that's good that's going to happen 5 to 10 years from now, because if that gets priced into the stock and any sort of new, not even if any adverse developments, just some people think that the demand might not be there, you can get these big sell-offs. So, Air and Wolfspeed both trade at, high valuations. Like you said, again, the Tesla innovation is, but they're somehow able to design their chipset so that the heat dissipation was much more efficient. And the thing about silicon carbide is that it can run these really, very conductive, and it's also more heat resistant. So they said because of their design, they were able to lessen the need for silicon carbide. They're still going to need silicon. They're still going to need auto chips. So, and then, we'll see if this actually happens. There is going to be a need for silicon carbide in the future. The question is the growth rate going to be like 30% compounded or like 20% compounded? Probably. So the value investor in me is thinking that maybe the stocks like ON or some of the others that are trading at reasonable valuations, this could actually probably be maybe an opportunity to get into those stocks if the pessimism continues. Because again, it's Tesla. I think I was promised like autonomous flying cars by now, back in 2016, and they're not here. So who knows? Maybe they'll have to use more silicon carbide than they're forecasting. But again, it's just tough to buy like the hot, kind of cultish, expensive chip stocks, because as we'll see later when I talk about applied materials, innovation can happen really fast in this industry for the good of some players and then for ill for other players who can get disrupted. That's what makes it so exciting. But those are my thoughts. What do you think, Nick?
Yeah, this is not a surprise to me. The catalyst is a surprise. But so I own Air Test Systems. I've been holding off on purchasing ON for the third time. When I do eventually, it will be my third stint owning ON Semi over the last decade and a half. But I cover silicon carbide over on my Chip Stock Investor channel. The last time I did an update on Air Test Systems, which I do own already, my cost basis is in the mid-teens. So I've still doubled my money after today's huge sell-off. So I mentioned to everyone over there. I had a couple of questions about it. And I just said, fair value is probably less than $30 on Air. I still think presently like a fair valuation on is maybe low 70s, maybe high 60s. And so I've just been patient. As great as the growth outlook is for these stocks over the next decade plus and beyond, I think that's still the fair valuation. And like Billy just said, even after the big sell-off, they are still premium priced, but I think it pays sometimes to just sit tight and wait, even though this catalyst is kind of surprising. It's not what I expected to cause the sell-off. I really kind of anticipated a cool off in the auto market this year. Doesn't look like we're going to get it, but here's the sell-off. Maybe this is the buying opportunity I've been waiting for on. I'm not sure I'm going to add to my Air position just yet. I have no need to in that particular position, but maybe this is like the buying opportunity that we've needed for silicon carbide. And I will also note, this is a scaling thing. It's just a classic manufacturing business model situation. Silicon carbide is very expensive right now, but as it scales over time, it will get cheaper and start to approach the cost of just a typical silicon chip.
Yeah. Thank you for that, Billy. Thank you for that, Nick. And just a few points from there. I want to say, Billy, you made a great point where sometimes investing in these companies where we see these huge future growth, innovation can kind of just kick them in the butt. I mean, random scenario, right? A lot of us invest in Nvidia, right? Because we know their GPUs are pretty strong for artificial intelligence, and that parallel computing is pretty efficient. But who knows? Maybe innovation in the next 2 to 3 years can come out with some random product that we didn't think about, some XPU or something, or some random stuff that performs even better. So that's always the risk when it comes to investing in some of these kind of high tech companies. Is innovation is always out there, and even if you're a leader, if you're not looking in the right direction, it can come and bite you in the behind. Another thing is, right, we have Tesla. Tesla is a little bit more to some extent than an automaker. They do a lot of chip designs and stuff like that. So we still have that. I don't own any companies here, but just in the general market, we still have a lot of other automakers that are focusing in this space that are probably not going to develop their own stuff. And I don't think Tesla is going to be like, hey, we've found a way to do it. Let me share this technology with you guys because I want everybody. So there's still a lot of players out there that can benefit from this, and I'm pretty sure there's going to be other opportunities outside of the automotive industry that are going to need these types of chips. So, like I said, I think I'm going to take a closer look at a lot of these companies now that the pullback has kind of happened. Like Nick mentioned, I did think that maybe weaker auto sales that we might still expect would have been a nice pull down as well, but maybe this might be it. So, pretty interesting topic here. And something to kind of keep a closer eye out. But I personally don't think it's game over for any of these stocks. All right, guys. So that's it for topic number one. For topic number two, I think we're gonna pass it over to Nick. And Qualcomm and Apple have a nice battle. Nick, tell us a little bit more about what's happening here.
Yeah. Qualcomm and Apple battle royale. This is a multi-year story, really. Brief little recap here. So I think everybody knows Apple and Qualcomm have had some legal dust-ups in the past over connectivity components and Qualcomm's patents, which can get pricey for a company like Apple that needs those chips to enable wireless communications on, like, let's say, the iPhone, which is still a huge, ginormous chunk of Apple's business overall. So to kind of combat this, back in 2019, Apple acquired the smartphone modem business from Intel for $1 billion. Now, a smartphone modem basically allows a device, a mobile device, to communicate with some sort of wireless network and converts that signal into actual digital signal that means something when we're using the device. So given this situation, Apple took this segment from Intel, has been trying to design its own wireless modem. Qualcomm actually said a while now, back at the end of 2021, that they expect Apple will be a basically insignificant customer exiting their fiscal year 2024. But this seems like this has been pushed back multiple times because Apple has continued to use the Qualcomm modem. The current iPhone 14 uses Qualcomm. Reports are suggesting that the iPhone 15 later in 2023 and the models that will continue to be sold into 2024 will also rely heavily on a Qualcomm modem. So it seems like, I think we talked about a couple of weeks ago, and Billy, you made the comment, it speaks to how good Qualcomm is at this stuff. Apple's having a tough time designing these things. But at Mobile World Congress this week, happening in Barcelona, Spain, Qualcomm CEO Cristiano Amon said that Apple could begin using its modem in 2024, so next year. Now, I'll note there's still tons of questions surrounding this, like just as an example, will Apple be able to completely part ways with Qualcomm? Will it partially use Qualcomm modems while also doling out its design to another manufacturer and sort of diversify its supply of these things? So lots of questions that remain to be answered. Amon did say that if Apple still needs their modems, they know where to go in 2024. So I don't know. I'm not sure exactly what's going to happen, but I think the big takeaway here, my third slide, is Qualcomm actually predicted all the way back at the end of 2021 that Apple would be, again, basically an insignificant customer by the end of their fiscal year 2024, just a single digit percentage of their overall revenue. And along the way, even without Apple, Qualcomm said that they will continue to grow revenue at a low teens percentage rate and still be highly profitable. So Qualcomm's going to be just fine without Apple. So let me kind of volley it back to you guys here. Worried about Qualcomm if this latest Apple news is true, or do you think Apple's bitten off more than they can chew here?
I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
I'm not worried about Qualcomm because it's sort of the expectation. I mean, management's been pretty upfront about they expect the Apple revenue to go away. So I think that was priced into the stock for the most part. I don't know if Apple's bit off more than it can chew. I think it might not be able to develop a modem as quickly as some might have thought. Like it might take longer than the 4, 5, 6 years that some people were initially saying when they initially bought the Intel unit. And it's obviously a difficult thing to pull off. I mean, Intel back when they were trying to do this was a much stronger company and they couldn't do it. So I have to think Apple, with its ingenuity and its massive amount of cash resources, will eventually get there. But I think it might take an extra year or 2 or 5. In which case, Qualcomm's going to get just those extra years of cash flow, which bonus for shareholders.
Yeah, I'll take it.
Yeah, I agree, Bill. I mean, like you mentioned, Nick, I really enjoyed that management has been kind of forecasting this already and has already has it on their forecast for the upcoming years. So any extra revenue that might come is a win-win it's a win for Qualcomm and for investors. And again, very similar to Billy, I don't think Apple bit too much. It's just taking a lot longer to chew what it bit. But it'll eventually finish, and I think it will. I think Apple will continue to do this down the line. So when investing in companies that do have some exposure to Apple, that's something that you have to kind of think about as a potential risk of Apple maybe eventually starting to continue down this process of jumping into that market as well. The great thing, it seems like a lot of companies that do that right now are already looking to expand into other markets. I know Qualcomm, right, with their IoT products, they're hitting other customers, their automotive products, their CPU products as well. So they are no longer that mobile business that everybody used to remember them as. Maybe they still have a nice backing from it, but it does seem like moving forward, that's going to change. And hopefully, management being upfront and letting us know like this, hey, there are potential that some of our customers might continue to become lower percentage, continues to happen as to let investors know that, hey, this is a company that's changing around. All right, guys. So now we're on to topic number 3. Applied Material announced a few new products. It does seem like some ASML investors were a bit worried when they announced this product, but Billy's going to lead the charge here, so I'll pass it over to him.
Yeah, I just can't stop talking about Applied Materials. I talked about them last week and their earnings and how well they were doing on the trailing edge with automotive chips. And then, sure enough, on Tuesday they introduce a brand new type of semiconductor equipment machine, which doesn't happen often, maybe once every 20 years, for the leading edge. So this is pretty exciting stuff if you're an Applied Materials shareholder, I believe. I don't think it's going to have that much of an immediate impact, but I think when you're looking through the end of this decade, it could be material. So they introduced a new machine called Centura Sculpta. So as it's named, um, this is a pattern shaping and sculpting tool that uses liquid plasma. Basically, what it does is when you get the EUV lithography, you're shooting light through a lens onto chemicals and making these tiny designs, and then you're stripping the material away that the light hit in order to strip away material to make the trenches for the transistors. So the advent of EUV EUV has gotten to like very, very tiny sizes. However, there's still limitations. So not only are the transistors very close together this way, but then you have bunches of transistors that go like tip to tip. So the different transistor systems, spacing them away from each other. That's actually been hard to do with EUV. And when you want really, really close packed in tip to tip transistors, leading chip makers have had to do something called double patterning. So you can see on the right slide here, so you essentially have to run the EUV once with those horizontal lines. On the right in the gray area is what double patterning is. And then you essentially have to run the wafer again, make the perpendicular line with a different chemical. So that's the space in between the transistor systems. However, with this new machine, which has apparently been in the works for about 6 years, what this new machine from Applied Materials can do is it can take like lithography patterns spaced out and then manipulate the trenches after the fact without having to do an entire new EUV run. So it's kind of like sculpting a big sculpture. You like get the general shape and then you go in like with a little tiny tool and make the very fine pattern. And so this machine is essentially it's like the little tiny chisel that makes the very fine pattern. And so what that does essentially, if you go to the next slide, so on the left you can see the typical run. It's basically saves an entire EUV step. And as you can see on the left, on the second slide, the top, you can see that how many steps are required for an entire EUV run. There's deposition, cleaning, metrology, another lithography, etch, like multiple steps. So if you can basically get the chip done without having to do that extra step, if you look on the right, it saves a huge amount of time and money and the carbon footprint. So they're saying this will basically save $250 million in capital equipment costs for chip makers per fab, essentially. And when you think that an ASML EUV machine, it costs like $150 million, and then all the other machines that are cut out of the process, that seems to check out. It'll also save $50 per wafer, and it'll greatly lower the energy and water usage when leading chip makers use this. So it's just pretty exciting. Applied Materials said that leading edge customers are now just starting to put in commercial orders. On the presentation, they noted there was quotes from Intel and Samsung that they're going to use this for their most leading edge chips. So I think it's probably going to it'll be small, probably in the hundreds of millions of dollars this year. But if you think about when we go to 3 nanometer chips, and then we're going to 2 nanometer, and then we're going to 1 nanometer, with each of these node transitions, there's probably more double patterning that would have had to happen. So this is probably going to become more Sculpta intensive as the leading edge progresses, which is why it's pretty exciting for Applied Materials, and possibly to the detriment of the other types of semiconductor equipment. Not really worried about ASML and KLA, but around the edges, I think it could. I mean, ASML said they're basically like sold out for the next few years, and they can't make enough machines. So I think around the edges, maybe a couple fewer machines several years from now, but that's still going to be probably higher. But this is more of a plus, I think, for Applied Materials than it is a negative for anyone else, although it might be a slight negative. And I'll pass it over to you guys. What do you think?
I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
Definitely, Billy. I want to say I think for it to be a negative for ASML, we would have to understand which manufacturing companies. Right, we have two steps. They have the first step, then they do the second step. Which manufacturing companies purchased 2 lithography machines to be able to do this step faster? Or did they just have one machine and they just run it over and over again? So I guess it might depend on each manufacturing plant. If they just had one lithography machine do both patterning, then in my opinion, they can just, hey, now we have the cycle time has been cut, so we can probably produce even more chips now that we're only using, the cycle time has been reduced, so now we can use this machine again for another form of wafers. And I'm going to say lithography machines are super expensive. I don't think there's going to be many companies that are just purchasing to speed up that process a little bit more. And if they did, now they have that second machine to just increase maybe throughput output of the wafers that they have. So definitely pretty interesting to see here. I also was thinking, I mean, it doesn't just affect the lithography portion. It affects different portions of the manufacturing. We can see the step, how many different steps are done for this. And Applied Materials hits a lot of those steps as well. So I don't think they would kind of do anything to kind of step on their toes as well. So by them, if they're not going to be stepping on their toes, I don't think they're going to be stepping in others' toes as well.
So that was actually a question that actually came up. One analyst, they did a presentation after this, and an analyst asked that very question, like, are you guys going to be cannibalizing yourselves? And management was like, look, this is a pretty big innovation. They're probably going to charge, a premium for it. And it's going to be a net positive for us. So I think there might be a slight impact. You can either have 2 ASML machines or you can have one and wear it out more. So there's also the servicing part of it.
Yep.
There's also, you trade off between space used and cost and volume, which, we'd have to be inside the foundry to know exactly what they're thinking. But yeah, I mean, most chips don't use a lot of double patterning, but the most advanced chips need to use it for a few steps, is what the takeaway I got from the presentation. And that'll increase as we go to ever smaller transistor sizes.
One more thing before I pass it over to Nick, Billy, any thoughts on why maybe we heard from Intel there, and we also heard from Samsung, but we didn't hear from TSM. Should investors read something between the? How do you think about that? Is it just, hey, maybe they just didn't want to talk about it, or? How do you read that?
I didn't read anything. It means it works better. TSM's going to use it. I don't know. Intel and Samsung are trying to advertise their foundry services as much as possible, so they can get their name on a brand new type of semiconductor tool. That's probably pretty good marketing. I don't know why TSM's not on there, but I'm sure they're going to use it if it works. It's not like Applied Materials isn't going to sell the machine to TSM. They sell to everybody.
Yeah, I meant it more like maybe if TSM, right, the number one leader, didn't mention something, some investors might be like, hey, maybe this might not be as revolutionary as we think, because if it was as revolutionary,
Sure.
TSM, because they are the leader, they would have been they would have said something. But I agree. I mean, maybe TSM, like you mentioned, since they're such a big player, they don't need to get that publicity like Samsung or Intel at the moment. So Nick, let me pass it your way for you to share your thoughts. I'm pretty sure I took too much time.
No, no, not at all. Just a few things I'd add here because I own both ASML and Applied Materials. And I've been asked numerous times why that is. Why not just pick one? ASML, obviously the higher growth business over the long term. But I think, so the first point, I think a lot of investors that own ASML don't realize that all ASML does is produce the machine. They make the machine that produces the light, the EUV. That's it. You still have to have other equipment to make that light usable. Applied Materials is the other half of the equation. For years, Applied Materials makes a machine, the reticles that go over the EUV machine that makes the patterning possible with the light. For example, Jose, 2 months ago, you and I on your show here discussed another Applied Materials machine, a new metrology machine for inspection of EUV wafer patterning. And now this one that Billy, you're now explaining. So Applied Materials is actually very complementary to ASML. That's why I own both. And any investor that owns ASML and poo-poos Applied Materials, you might want to revamp your thesis on that, because these two companies are two peas in a pod. And second point, this is news to us and to the rest of the investor community. But as we've discussed before, the interesting thing about the semiconductor industry, because it's so expensive, it's so capital intensive, all these other companies probably were very well aware of what Applied Materials was working on well in advance. And that's probably an understatement. When ASML provided its 2030 revenue and profit guidance, like for the next 8 years, they probably did so very well aware that Applied Materials was working on this machine. And I actually would argue that the development of this machine actually could accelerate the adoption of EUV because it's more efficient now. So a lot of companies that have maybe been dragging their feet because EUV is just so stinking expensive just to buy the machine, first of all, and then second to operate it. Now all of a sudden, hey, I can also buy this complementary Applied Materials machine to go with my EUV lithography equipment. Suddenly the economics add up. Let's buy it. Let's adopt it. So I think it's actually an accelerant to EUV. So I'm bullish on both companies. I think this is fantastic news. I don't understand the freak out in ASML stock. I think this is great for shareholders of both companies. And if you own one or the other, consider owning the other.
Nick, no wonder Warren Buffett sold TSM. He knew this machine was coming. He read everything behind it, and he knows that EUV, this new machine, is going to help the advanced nodes and is going to make TSM a few steps ahead of
Nonsense.
us.
He sold it because he watches this show and he listens to what the three of us have to say. That's why he sold TSMC.
Definitely. So thank you for that. Billy, any final thoughts before we close out this topic?
No, it's just a brand new type of semiconductor production machine, which I don't know when the last time that happened. Most of the stuff is incremental. Like even EUV is an incremental improvement over DUV. So really cool stuff. If you want to nerd out about it, I think it's pretty interesting.
Yeah. Oh, I do want to say to any investors that are curious, learning more about Applied Materials and where all these other companies like CLAC, ASML hit. Applied Materials did the presentation for this. You can go to their investors website, and I believe page 2 or 3, they actually break down where ASML goes in this portion, where Applied Material goes, where CLAC goes, where Lam Research goes. So it's a pretty good slide. While I'm editing, I'm just putting this note here so I can remember to put this so investors can also just watch it while I just plug it in here. Yeah. All right. So next we'll move on to topic number 4. Yes, topic number 4. Does Nvidia need money? This is obviously a topic I'm going to discuss. So on February 28th, Nvidia submitted a shelf offering of up to $10 billion. So first, a shelf offering gives Nvidia the opportunity to do offerings at a later time. So it doesn't mean that Nvidia has done the offerings right now, but it gives them the opportunity to do this within the future, and it doesn't have to be all 10 billion at one time. I do believe they're able to do it in numerous steps. So I read that. I find this pretty interesting here. I'm wondering what is happening here. I personally don't think Nvidia needs cash at the moment. If we take a closer look at the chart I have presented to the right, we can see Nvidia has about $3 billion in cash and short-term investments. They have built up a nice amount of total long-term debt. We can see about $10 billion. I don't foresee Nvidia using this cash for paying down debt. Especially if that debt came at an earlier time in the past few years. Those rates are probably amazing compared to what they could get nowadays. So I don't think they're going to use it for that. The company is not bleeding cash. I mean, if we take a closer look, quarterly free cash flow was around 1.7 billion, and I see quarterly cash flow from operations was 2.2 billion. So I don't. The only thing that makes sense to me is. In the short term, I think we talk about this a lot. Nvidia does have that overvaluation price, right? In the short term of things, building up cash at this price point seems smart to some extent. But my question is, why do they need the cash? And obviously we won't find out until we hear from anything. Maybe another potential acquisition. Do they see a crazy downturn happening that they rather build up cash right now? Nick, I know you own Nvidia, so I want to hear your thoughts on what do you think is happening here.
I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
Well, I think you hit the nail on the head, Jose. It's preparation for when they might need it in the future. Doesn't mean they're going to do it right now. Doesn't mean they're going to do it all at once either. They have options now because it's a mixed shelf offering. So it could be new debt. It could be issuance of new stock, basically where a company, sells new stock out on the market and gets cash in exchange for it. It could be a combination of things. And I think this is brilliant. Like you just mentioned, and we've talked about in recent weeks, NVIDIA is expensive. It is a premium price. And that's important because oftentimes we hear investors talk about things like, they'll say things like, so-and-so CEO is an exceptional good allocator of capital. What the heck does that even mean? This is what it means right here. For example, you might use debt when the debt is cheap to invest the cash proceeds in a high growth project where the growth greatly exceeds the cost of the debt. Or it could mean when a CEO sees that the stock is maybe overpriced, overvalued for the immediate term expectations, okay, you're going to sell some stock then at that high price and get cash. And also, again, invest it in a high growth project. So I think this is brilliant. NVIDIA is a great capital allocator. They have done this at times over the years where they take a high stock price and use it as a type of currency to invest in high growth stuff. Same with debt. They've made prudent use of debt at low interest rates to fuel their business. And I think they're just doing more of the same here, getting ready to possibly do more of the same here at some point in the future.
Thank you for that, Nick. Billy, same question, but let me add a question to you. I know you're not a shareholder of Nvidia. At this point, how should, if this happened to another company, maybe not Nvidia, how should investors see it? Be like, hey, this kind of gives me a thought process that I own this company, but management itself is kind of telling me that, hey, it might be overvalued right now. Why shouldn't I sell? And if management, the people who are running this business, kind of are saying, hey, maybe it might be overvalued, maybe it might be time to take some gains, how should investors still remain bullish in something like this? And I know since you don't own it, I want to hear your thought process. Maybe then I'll pass it back to Nick to maybe hear his thoughts on that.
Well, we don't know what they're doing yet. I mean, they could do preferred stock. So it's, a lot of times when a company takes out preferred stock, um, there'll be a conversion feature at a higher price. And then a lot of what companies will do is that they'll buy options to basically offset the dilution for a little bit of an extra cost, but then they get a lower interest rate that way. So we're in a higher rate environment. Maybe that's what they're doing. Um, Maybe they're going to sell stock. We don't know yet. I kind of think um, they might have an eye on some artificial intelligence startups. I'm kind of wondering. Um, Alphabet has DeepMind, and Microsoft is linked up with OpenAI, and Nvidia is developing its own stuff internally, but maybe they have some Silicon Valley private unicorns that are on the list. I don't know. They just giving themselves options. We don't exactly know if they're selling stock, if they're going to sell preferred stock, if they're going to sell debt. So it's an interesting bit of news. I wouldn't really change my mind one way or the other if I were an Nvidia shareholder. Um, if you didn't think it was too expensive yesterday, I don't think you should be worried that it's. I mean, you should always worry if the stock you own is expensive, but if you weren't worried about its valuation yesterday, I wouldn't be more worried about it today. Um, so I wouldn't like change my thesis on Nvidia because of this shelf offering.
Thank you, Nick. Any other thoughts?
Yeah, I think that's a great way to close this down. Nvidia
Yeah.
is a long term investment, and that thesis hasn't changed because of little this little bit.
Yeah. And I think one just final point is this segment. There were a lot of maybes. Maybe they might do this. Maybe they might do that. Maybe they might do this. And I think that's why sometimes just reading the top headlines shouldn't really affect you because there's so many ways that something like this can go. And obviously, we're talking about it in sense of Nvidia, but it can pretty work. It can work really well with any type of investment that you own and any type of stocks that can kind of see the same thing. So I appreciate both your thought process, Billy and Nick, and I'm pretty sure the viewers do too. All right. So next, we're gonna jump into topic number 5. Besi, semiconductor. I'm not too familiar with. Obviously, I'm gonna guess it has to do with something in the manufacturing side of it or the equipment side. Since I think that's what I've been learning a lot more from you guys. One thing I mentioned in one of my last YouTube videos is Applied Materials is one I don't own, but being with you guys here, this is one that every day, especially with the new products, I'm like, you know what? Maybe this is one that needs to be on the top of my watch list for opportunity to enter my portfolio. So I just want to thank you guys for bringing that one to you. But let's talk a little bit about Betsy, and I think Billy's gonna lead here, so I'll pass it his way.
Great. Thank you for that, Jose. So BE Semiconductor, also everyone refers to it as Besi, is a advanced packaging company. And I talked about Kulik and Sofa a couple weeks ago. And since people found that interesting, they should also know this company. Um, so BE Semiconductor is a European company, first of all. Um, and these guys also do packaging, but they're much more geared towards the most advanced technology in the packaging world. So when you hear about AMD's new chiplet architecture that they introduced last year, these are the guys behind it. And they compete with Kulik and Sofa. Kulik and Sofa has sort of the legacy packaging stuff and some advanced packaging. These guys are like solely on the advanced packaging, latest technologies. So the good news is that this company is a bit less cyclical. It's a bit higher margin than Kulik and Sofa, and it's a little bit more stable. A really impressive long-term track record. It also has a higher dividend yield. The downside is that it's much more expensive than Kulik and Sofa. It currently trades at a 23 PE ratio. As you all know, I'm valuation sensitive. And moreover, it typically pays out almost everything it makes as a dividend, a one-time annual dividend, which is more European than U.S. companies. They buy back some stock. They don't buy back as much stock as their U.S. peers. And I don't know why, but a lot of European stocks tend to gravitate towards dividends versus buybacks. So depending on what you like, that might be a good or bad thing. But 3.8% yields. This is a very advanced company technologically, and they have some impressive operating performance. So they just reported earnings. If we go to the next slide, sorry, there's a lot here. They had a lot of good slides in their presentation, so I pasted a bunch from here. So obviously we know we're in a big downturn. I talked about that with the Kulik and Sofa earnings. They had like a quarter-over-quarter downturn of something like 40% or something like that. These guys are down, but a little bit less. Revenue was down 18.4% quarter-over-quarter and almost 20% year-over-year. But if you look at the order number, this is why I'm getting a little bit optimistic, I think, for the semiconductor industry, even though the news continues to be mostly bad. If you look at the order numbers, last quarter's orders, if you go on were up 44% quarter-over-quarter. Now it's coming off a really low base, and the orders are still lower than they were a year ago, but the orders exceeded revenue. And I think that's because you're getting this ramp up in, leading edge logic competition. So you're getting more demand for this sort of hybrid bonding, thermocompression bonding, these new types of technologies that can help do chiplets, because Intel's going to be doing that too. I kind of think everybody's going to be doing chiplets at some point. So there's a secular growth driver there. So the quote was, the increase in orders resulted primarily from higher bookings in high-end smartphone applications. So again, most advanced chip, hybrid bonding systems. The order trends reflect continued investment in high-end versus mainstream assembly applications, but that's counteracted by the ongoing weakness in China. So maybe now that China's reopening, stuff will pick up. If we go to the next slide, this is more industry-wide stuff. So that slide on the left is, I guess, the advanced packaging market opportunity every year. As you can see, it declined in 2022. They're projecting it to decline another 16% this year. But then, like everything, they expect the cycle to bounce back in 2024, pretty strong with 20% growth, and then another 18% growth the following year. The slide on the right is the composition. So you see the revenues down slightly in 2022 versus 2021. Big drop in mobile, which I think is related to the Chinese lockdowns. However, there is an increase in their machines for advanced computing and automotive and services that counteracted that. So they actually had several segments that were actually up year over year, which I think goes to the advanced packaging, these hybrid bonding tools that they're beginning to sell. If you go to the next slide, or the next slide, Uh, the slide on the left is basically the 2017-2018 cycle compared with the 2022 cycle. So as you can see, both years were downturns compared to the prior year, but we're making higher highs and higher lows here for revenue, orders, operating profit, and margin. And if you look at the slide on the right, look at how you can see the green is their revenue every year. This is a long-term slide going back to 2006. You can see the cycles, but you can see the overall trend in revenue and their margins trend up with every cycle. Look at that. So that you can smooth that out, and voila, you have a growth stock with some bumpiness along the way. So we're probably going to get maybe a flat to down year this year, but this is a stock I would keep an eye on if it ever gets cheap. It doesn't seem to ever get quite as cheap as I'd like. I don't know what it is about the Europeans. ASML is expensive and Besi's expensive. I think maybe the Europeans maybe value semiconductor equipment stocks much higher than the rest of the world for some reason. But if it ever does get cheap, this is a really high quality company that I would have on my radar because packaging technology, semiconductor equipment manufacturing is going to become more packaging intense, I think, over the years. So there's strong long-term drivers for this type of company. And I will throw it over to you guys.
I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
Just a quick note before I pass it to Nick. I just hate you guys. I just want to say that I only have limited amount of funds per week. I feel like I already have applied materials on the top of my list. Advanced, like you mentioned, Billy, advanced packaging is with this chiplet push that we're seeing, and I believe it's going to continue to progress from here. This one can definitely be a benefiter. This one's now on top of my list to do research on, where applied materials is probably on top of my list to kind of start to get into. This is going to be one on the top of my list to start to read more into, because I do believe there's a lot of opportunity there with this chiplet packaging that we're seeing happening globally. And then with all this Tesla news that's happening, and we're seeing this kind of downturn on a lot of kind of silicon carbide, like I just don't know what to do. I don't know where to put my money in right now. And you guys are just giving so many great ideas. So thank you, Nick. Maybe some great insight opposed to what I just provided. So just sending it your way.
I have some great insights here. First of all, Besi is the best chip stock name out there, period. And second, Jose.
That's what the viewers are here for, Nick. That's Besi. What the viewers are here for.
Yeah. What'd you buy today? I bought Besi. Second, Jose, when you do buy applied materials, which I fully expect you are going to do soon, Billy and I will take credit for pushing you into doing it. But if in, say, 3 years down the road, you complain that it lost money, we're going to gaslight you. And it was all your decision. By the way, I think it's a good order.
Besi has a partnership with Applied Materials, which is interesting.
Yeah, it's really, I think this is a really interesting company, and the packaging is a big deal. The chiplets thing, which Jose, you covered regarding AMD a while back, just to like kind of illustrate how it's just getting started and how it can continue to progress in the years ahead. So like the new AMD CPUs, even on PC, it's typically like the CPU used to be a single die. That's like the little chip of silicon that's cut out of the big circular wafer. It used to just be a single die, and now it's dice. It's two of them. It's two dies that are on the same system on a chip and then interconnected. So the interconnect between those two chiplets is where Besi comes in. And I mean, we're talking Intel and AMD have been saying not just two chiplets in the future, but even more than that. So the amount of packaging that will be involved is going to become very, very intense. And some of the plans for this it's really interesting. AMD and Intel, I think, have begun talking about not just like integrating their own chiplets into these little systems, but also third-party chiplets as well. It's going to get very, very complicated, and I think it's a very bullish development for companies like Besi and for Kulik and Safa, and ultimately, like you just said too, Billy, Applied Materials, which is, I think, like the granddaddy over all of them. It's like the connective tissue between all of the different chip manufacturing equipment pieces of the puzzle. So back to, I guess, what you just said, Jose, I think Besi is a fascinating business. I actually want to dig into this more too after Billy, you just brought it up. But ultimately, I kind of still like Applied Materials at this particular juncture.
Thank you for that, Nick. Thank you for that, Billy. Billy, any final thoughts before we close out this topic?
Nope. This is just, if you follow industry developments and you want to understand where like the leading edge is going, and you want to monitor the chiplet boom, maybe read this latest transcript, which is interesting. Sorry, my computer's making noise. Just another interesting name. It's a little bit of an expensive stock to me, relatively to some of the others. So again, probably higher quality revenue and profit than Click, but it's more than double the valuation of Click. So trade-off. Mm-hmm. But definitely a name and a company to follow if you're interested in the leading edge production.
Thank you for that, Billy. So now we're coming to the last topic of this episode. And I don't know. I don't know if it's just me and I'm just biased. I feel like all these episodes just keep getting better and better each time. So I just, again, want to thank both Billy and Nick for helping that happen. For the final topic, we're going to take a closer look at the U.S., their CHIPS Act, and they're starting to accept applicants and what that means. So, Nick, I'll pass it your way because I know you're leading the charge here.
Yeah, this is a great segue from Besi that Billy just covered because, well, we'll talk about why it's a great segue, I guess, instead of me saying it's a great segue.
We'll take your word.
So, big news. Big news here. The U.S. CHIPS Act is beginning to accept applications. So maybe a little background first. Again, the U.S. CHIPS Act passed last summer is basically a $52 billion package to help encourage primarily semiconductor manufacturing in the United States. Also some research and development funds as well. But the big push here, at least out the gate, is that manufacturing, because it takes so many years to get a new fab up and running. So interesting little tidbit here. Since the CHIPS Act was passed, the Semiconductor Industry Association, or SIA, actually said that they think about 40 new fab projects and over $200 billion in private investment have been earmarked for chip manufacturing. So this has kind of set off maybe like a proverbial feeding trough for the semiconductor industry. It's just going to be a big spending spree as a result. But applications are now getting ready to be accepted. $39 billion will be awarded for manufacturing, including $2 billion for mature nodes. So that would be things like automotive chips, for example. And then the remainder of that $52 billion is going to be the research and development piece. The bill also includes a 25% tax credit for companies that open up a new fab in the US. And there will also be $75 billion, an additional $75 billion that will be either direct loans or a loan guarantee from the US federal government. So it's a pretty big amount of money for not just one industry, but one particular section of an industry, a sub industry, specifically chip manufacturing here. So it's a big deal, but there are some pretty large footnotes that need to be considered for these companies, including Intel, which has really hung its hat on this as being key to its transformation. This is not a free money situation. Applicants need to prove that they qualify. I put a link in here on this second slide for the 75-page notice of funding opportunity that you can read through some evening when you're having trouble going to sleep. But if you want the Cliff Notes version, basically the applicants need to prove the funds will actually be used for fabs, not dividends, not stock buybacks. Intel's done $100 billion in stock buybacks since like 2005. So that's like money that kind of went up in smoke here. Maybe why Intel cut that dividend that you guys got really heated about last week. Shame on you guys for getting so upset about that. So basically, the government wants to make sure the money is going to actually constructing the fabs. There also has to be agreements about no manufacturing expansion in China from these companies that take money. They want companies that are going to be dedicated to community improvement. They pay their employees well. And then also, I think the biggest thing that hit the news on this was the excess profits thing. If a company makes excess profits over and above what they say they will when they apply with the US feds, there's going to be a profit sharing agreement. So that's interesting. And I'll circle back to this after you guys comment here on this last point. But here's my question. This is a very I saw a Chris Miller interview, the author of Chip War, and he said this kind of U.S. CHIPS Act is a very American thing where like money is kind of thrown out there all over the place. Everyone gets money, and then in a decade we'll see where the chips lie, so to speak. Pun intended, probably. Who's going to be the big winner in the next decade? So there's going to be winners and losers from this U.S. CHIPS Act. Who do you guys think wins? Who do you think loses?
I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
First, I want to say, I wonder if the public will be able to see these applications, because I would be curious to see how maybe a company like Intel what they project their earnings be, and then see what they share with investors and how that might differ. If there's, hey, maybe I might overshoot here. Obviously, there's probably someone looking at that to make sure that doesn't happen. But I am curious to see if public and investors might be able to look at that. True winners, I don't know. I want to say I do think a big winner is going to be engineering in general. I feel like this huge push in semiconductors here in the United States is maybe for taking a closer look at, again, I know this is a stock show, but I feel like sometimes semiconductor electrical engineering isn't that cool. Things like this can make it a little bit cooler, or
Jose,
make it
I
more
think you're cool.
Thank you. I mean, I feel like people look more like working at a SpaceX, working at a Google, working at something else, but they don't. I feel like there's not that same type of popularity of, hey, maybe I want to go work at an Intel, maybe I want to go work at a chip packaging, at a chip manufacturing company, where those are the ones really leading a lot of this technology. And I feel like something like this will kind of promote that a little bit more. So I think in the education, it might improve a lot more STEM research, which I think is going to be super exciting. I can't really think of a stock or company. I think there's going to be a lot of winners here, but I can't think of it much. So I'll pass it over to Billy.
I don't know. Well, I think the company that stands to benefit the most or has helped out the most is Intel, because they're an American company. They're probably going to invest in the U.S. anyway, and they don't have any profits, so no excess profits to worry about.
That's true.
I'm kind of curious how they...
Not now, anyways.
Yeah. I'm a little curious about how the government is going to delineate between like the profits companies are already making, if there are any, and getting the funding for this capex for the US, and then how are they going to calculate what is excess profits? So does that mean the company has to like project what they're going to do, and then if they exceed, like if they do like way better than that, then they have to give some of it back to the US? I mean, I don't know. I assume they're going to be pretty pragmatic about this. I think Gina Raimondo is pretty smart, um, and the people in the administration know what they're doing. But it's going to be interesting how they delineate between the funds you're getting in and using that for buybacks and dividends and what you would have had anyway, and then what is excess profits. I don't know. It's going to be, as they say, the devil will be in the details, and we'll have to find it out once the applicants are awarded their funds.
I do want to say I had some thought process, and I think we've discussed it a lot. Winners are going to be companies that are dealing with the equipment side right now, like Applied Materials, maybe, because it doesn't matter who gets the money here. At the end of the day, they're going to need to buy that equipment, especially since it seems like a huge bulk of it is going to go to the manufacturing side of things. So I think there's only limited amount of equipment companies that are going to be the favors to win here. And then from if you trickle down the line, the risk probably increases of them being the winners or the losers, but obviously that can also dictate the overall stock performance in the long term of things. So for the short thing, I think maybe equipment. Down the line, it just trickles down more on chance.
Yeah, agreed. Billy, I agree with you. Intel's probably the biggest beneficiary because they're in such a hole. It still doesn't necessarily mean it's going to equate to positive returns for the stock. I might point to like the GM situation in the wake of the financial crisis. You know, GM obviously came out a much better company getting government help back in 08, 09. Didn't mean it was a fantastic stock to buy, though, when they re-debuted a little bit later with the stock. So Jose, I'll just double down on what you just said because it's where I'm betting with my money. I like the equipment companies like Applied Materials, ASML, and so on, because they will get the funding, but it's going to be indirect. They're going to get the money via the chip fabs that get the funding from the government. So while all the manufacturers will be held to these very stringent standards if they accept CHIPS Act money, which means for the next 5 to 10 years, excess profits could be capped by the feds, at least for those projects that are, deemed CHIPS Act projects. But the equipment makers are not going to be held to those standards, even though they kind of still indirectly get the money. So for the next 5 to 10 years, I like the chip equipment manufacturers. And then after the dust settles from all of this, and we probably have an epic crash in, let's say, 10 years, I'm roughly saying 8 to 10 years is when I expect like there to be like a serious blow up. Once the dust settles from that, I think we're going to have some very clear-cut winners in the chip manufacturing side of things. And that's the point where I will probably be really, really interested in shifting my money to the companies that receive the cash from all of this right now. So that's how I'm looking at it. I like chip fab equipment for the next 5 to 10 years. And then after that, then I'll probably start getting more interested in the manufacturers themselves, if that makes sense.
All right, listener, stay tuned for episode 999, where we're going to finally talk about getting into the manufacturing side. I also, one final point I'd also want to mention, Nick, right? I'm pretty sure that these companies that are taking the money, when it comes to them maybe seeing too much exceed profits, they might be like, maybe, we can actually buy an extra machine here and there instead of kind of giving that money back to the government. So I feel like sometimes them giving money back is they're gonna maybe be like, hey, instead of doing that, let's maybe just buy an extra machine here or there. Let's try to do something else here and there to kind of make sure we're not giving away money back to the government or something like that. So
For sure.
thought process.
Buy the equipment stocks. Either way.
All right, guys. So I'm going to a rule for the next few weeks. We can't talk about any equipment stocks.
Oh.
so I can go and purchase it. All right, guys. So I think that's it for episode 17. I want to thank Billy and Nick again for joining me. All the links for there to find them are on the pinned comment, so make sure to check them out. Thank you guys again for episode 17, and hopefully see you guys for episode 18. Take care.